Good morning, everyone. We'll give it just another minute. We'll get started. Thanks for coming in. I know there's a lot of sessions going on that are all pretty interesting, so hopefully I can add some value. We're going to get started in a minute, and kind of setting it up, I'll talk a little bit about my experience as a developer building a fintech business and some of the technical hurdles we had to overcome, and then kind of contrast that with the experience I'm having right now, which is running a fintech business kind of as a CEO, and mapping my technology background and my very analytical way of looking at things to one that can deliver value to my investors and our team. So I'm hoping some of you are maybe in a similar situation, maybe starting your first company, or maybe as a founding technology person. Maybe by just a quick show of hands, how many are technical, writing code? Okay, about half. And then others maybe business side of a startup, or maybe in the venture or industry, maybe banking, or okay, so a little bit of diversity, which is great. So as we get going, want to make this a conversation as much as possible. I try not to do too much of a commercial, don't have as exciting of a background as some of the other presenters, but more importantly want to try to be able to share that experience to help you guys avoid some of your growth hurdles and challenges, and maybe examples of what tripped us up that maybe you guys could potentially avoid, some of the things we've picked up along the way that has accelerated our growth, and some of the things that caused some roadblocks along the way. So again, as we're going, feel free to ask questions. I'll try to leave a little bit of time at the end, but certainly not opposed to asking a question during the session. Hey, could you talk a little bit more about this? Or hey, you didn't mention this, but I'd really like to learn more, and see if I can help kind of contribute to the conversation. So thanks again. With that, I think we'll go ahead and begin. So the sessions from the engine room to the bridge, as I shared, I'm going to talk a little bit about my experience as a technical co-founder. I wrote code for about 20 years, kind of like Wade in a sense. I thought very highly of myself when I was writing code, and I quickly realized as I got further along, there were people a lot better than me, and I had to find ways to be valuable. And in that experience, I certainly learned a lot, and in the capacity I'm in now running a fintech, I'm going to hope to kind of contrast those experiences. So the things I valued as a developer, building code and systems and scale and kind of first principles, to one that is in a leadership capacity, building teams, building processes, and building business value. So Steve Robert, as I mentioned, in 2002, I co-founded a company called Bill Highway in the greater Detroit market. Relatively niche space. We were building payment systems for nonprofits. And what we were doing there was, in many respects, building straight-through processing for legacy systems, very large corporates. So that was nonprofits, unions, organized labor, relatively boring, complex, big businesses that had difficult back offices. And at the time, there weren't a lot of solutions really tailored to that. So we had built something very specific to their needs. And then had the good fortune of selling that business along the way. I'll talk a little bit about that experience. And then taking off my developer hat and putting on my CEO hat. So swapping stories with my man Wade here in terms of our memory of how highly we thought of ourselves as developers, to now how humble we are working in the presence of really great engineers, and increasingly the teams that we build to obviously deliver value. Autobooks is a company that's building, again, payment systems for small businesses, and we distribute through banks. So I'm hoping to kind of share our experience about that, if that's a path you guys are potentially exploring. So want to, again, have an honest conversation. This was kind of set up, which was perfect, in terms of fintech. I stumbled into fintech, not going to lie. I building technology and had to learn about moving money, and had to learn about accounting, and didn't realize along the way what we were doing. Full transparency, we had built a payment gateway without really realizing it. We had built virtual accounts and abstracted away payments from the DDA without really realizing it. And of course, later we realized that it was payment facilitation, that we were doing. And a lot of what we were looking for was hard to find from the experiences we were having. Only a few other companies like PayPal and others that we would read about had similar experiences. So we had to learn on the clock. And again, it was just hard to find information. There was a lack of transparency. Payments was oftentimes a black box. And again, before Moov, it was difficult to find frameworks and patterns and examples for where do I go, and who are the players, what happens on the other side of that auth request, or what happens when there's a delay or a bug or some complex fund flow discrepancy. And again, that led us to obviously being a little intimidated. Banking, regulations, compliance, security. It can be daunting, but I will quickly say from my development past, if you're comfortable solving problems, kind of root cause analysis, first principles, you'll quickly realize, I think particularly for technical people, those will quickly turn into assets because they're very logical, they're very easy to understand, and once you understand, the basic tenets of it, you'll quickly turn it into an asset, and it'll help you differentiate because it does trip up a lot of first-time founders and engineers because it's just so broad and complex. As you begin to kind of compartmentalize it, it becomes quite easy to digest, and we'll talk a little bit about that. And then lastly, it's expensive. At least my investors continue to remind me of that. And if you're selling in banking, long sales cycles. If you're going direct to consumer, at least in small and micro businesses, it's expensive to acquire. What I learned a little bit on, going from pilot to commercialization, some of our bigger clients required us to have healthy balance sheets because we weren't yet profitable. So today, I keep about $10 million on my balance sheet just so I can satisfy a bank's, vendor risk management, due diligence, to get essentially a financial exception. So when you're going through vendor risk management, they like to see that you're profitable, but most fintechs starting off aren't profitable. So you tend to, need to figure out how do you navigate that so you don't get tripped up in this compliance world and actually be able to ship product and deliver value. So share a couple of those, kind of examples as we get going. So as I shared a little bit already, technology background, again, was a programmer that following the money in the sense. We started off building systems for roommates, splitting bills on a college campus. So, if we're going to college together, you got the big room, I got the small room, you pay a little bit more, and odds are our parents are helping us subsidize the cost. So who's keeping track of all that? And, it's generally not done very well. We thought that was a novel idea, and we built it, but it was hard to get people to sign up. We moved on to property management companies processing rent, and that was kind of hard. You had to go building by building and get people to enroll, and we were getting progress, but it wasn't really taken off. We really started to hit some traction when we started helping fraternities and sororities. So of all things, groups on college campuses that had similar challenges. They all needed to get paid, they needed to collect, they needed to understand who owes money and who doesn't. And they are technically nonprofits, so they need to roll up their financial reporting for year-end purposes. So we basically kind of cobbled together this back office system to help nonprofits who weren't very technically sophisticated, in many cases very intimidated by finance, modernize their back office. And we finally hit scale when we outgrew the academic sense and got into organized labor and unions. So we probably over 8 to 10 years, grew that business to a few million users, processing a few, billion in transactions, and learned a whole lot along the way. Interestingly, we did that without any VC money. In Detroit, venture capital wasn't very well understood. First-time founder, just basically more time than brains, and a lot of creativity and resourcefulness. And again, we just had some success listening to our customers and delivering value. And then had a very interesting exit process when we sold the business in 2016 to TA Associates, which is a private equity firm on the East Coast, in a roll-up with a BluePay, which was a significant payment processor out of Chicago area. We were then, within a year, acquired by First Data, and a year later acquired by Fiserv, and then the company was later spun out via a private equity firm. So a lot of transaction experience and a lot of learnings in that process, and to the degree that's interesting or helpful to you, happy to share that experience. After we sold Bill Highway, I had unfinished business. Can only play so much golf and build so many decks, and had this fire in my belly still to kind of do something and make an impact. And we'll talk a little bit about the work we did that led us to the idea for Autobooks. But the premise was we wanted to attack a big market, something we didn't really accomplish with our former company, and we wanted to help folks that needed help. So like our nonprofit past, slightly unsophisticated, from a technology point of view, again, intimidated by finance because they were oftentimes run by volunteers. Our research quickly led us to the small and micro business segment, recognizing they still had lots of opportunity and still struggled for a lot of the very same reasons. And we wanted to apply our experience in banking and more specifically payments from a receivables point of view. We had learned a lot about merchant acquiring and payment processing, and the question then became, how do we acquire customers? Competing with QuickBooks and PayPal and Square is very expensive. These are great household brands run by very intelligent people, and we recognize an opportunity with financial institutions that already had customers, and we thought if we could build a better mousetrap, essentially acquire customers through a leveraged distribution model that would allow us to be ruthlessly efficient from a customer acquisition cost point of view, and again, bring our payments experience to help us do self-service merchant onboarding, which wasn't at the time very common, and still to this day, still kind of emerging. We've raised $50 million to date. We raised our Series A in 2017, pre-revenue, pre-bank customer. Don't encourage it, but it's necessary sometimes. It took us 3 years to acquire our first 100 banks. We'll talk about those experiences. And lastly, now that we've got a nice flywheel moving, we're compounding that through an embedded, kind of fintech strategy. And we will be live by the end of the year with 500 banks, and we're on pace next year for 2,000 banks. So really, really interesting momentum we're seeing in the environment. So to take a quick step back, in the early days, and I'm guessing hopefully some of you are in the same boat, joining a startup with a lot of inspiration and a lot of opportunity, but maybe still figuring out exactly where to get started. That was me. I was the CTO. I know how to write VB6 at the time. .NET was kind of emerging and had to learn this .NET thing. And there weren't a lot of the systems we know today. Zoras didn't exist, and Stripe really wasn't there. And I had to build payment systems without knowing a whole lot about it. And again, as I shared, we had kind of evolved as a business, but the undercurrent stayed the same, helping people get paid and then ultimately reconcile, so they knew what was occurring, and then doing it through a high level of integrity from an auditable pace, because again, our customers were ultimately needing to file tax returns based on the information our system was processing. And this is 2004, 2005, 2006. The mediums have changed, but the principles I think are still relevant today, right? 32-bit processing, we could not do a lot, meaning we had memory pressure, we had threading issues, we had, I mentioned memory management, CPU limitations. Systems weren't really built for scaling wide. They were, at the time, really about scaling up. Throw more hardware at the problem, throw more dollars at your infrastructure. And back then we were all co-located. We had to build our own SANs and firewalls, and it was difficult. And again, as I said, it was easier to scale up versus out. The problem we quickly ran into was the success we were able to achieve with the business, which was working with these large organizations. They would send us these files that had hundreds of thousands of customers that they needed to invoice. So we'd get these flat files, we'd have to parse them, and again, this is FTP and hopefully secure FTP, which wasn't always the case then, and we'd get these big files, big nasty files, and we'd have to parse them, and then we'd have to create our own checksum that would allow us to understand the integrity of the file, meaning let's say a union would send us a big file with 500,000 users. Those 500,000 users were representative of janitors to academics to principals and teachers. Each of them had their own complex contributions, based on their tenure, based on their geography, based on their roles inside the organization. So we had to do a lot of work to kind of take that data, map it, have a degree of integrity before we attempted to invoice or collect the appropriate payment. Then it got complicated because back then we were creating PDFs and emailing them. You kind of got this statement, and those PDFs took computational time to generate. Again, we're talking about 32-bit systems, and I'll talk about how we solve it in just a second, but it was very time-consuming. And again, engineers, my first kind of rodeo, I start with loops. You start building loops, and then you quickly realize those loops take a long time to complete. And then what happens when your loop fails? And how do you properly manage state so that there's a graceful recovery and you pick up where you last left off? So again, lessons that you learn that today's system, I think, helps insulate us, but again, the principles are the same, particularly when you're doing high volume processing, particularly in parallel systems, when you begin to introduce race conditions. So again, a long time to create a PDF. We also didn't have SendGrid to send bulk emails at the time, so we had to build our own email infrastructure. And again, had the obligation from our customer to send this volume within a relatively tight tolerance. Then once the invoices went out, we'd have this Black Friday problem where all these people came on the 1st and the 15th to make their payments. And again, classic, Black Friday, where our systems had to be designed for this really high utilization when under normal circumstances, our volumes were very low. So we had to figure out how do we, both from a front-end system, not crash, again, these are legacy systems, and then from a back-end system, the vast majority of these customers were on automatic payment plans. And again, this is before a lot of the sophistication from Account Updater existed, and we would have to roll our own payment system. When there was a failure, a decline, we'd have to manage that state and attempt to do retries. But more importantly, we had to do it within a relatively tight tolerance. At the time, we were working with Fifth Third Processing Solutions and later Lytle, and they had limitations on their TPS relationship with their card brands. So we had to figure out how do we send hundreds of thousands of payments, but do it within a tolerance that didn't overwhelm their servers from a TPS perspective. And then, of course, all that had to be summarized into the financial outcomes, building two-sided accounting entries into a GL. So it was an interesting challenge, and how we solved it at the time was relatively novel. I spent a year traveling around talking to people in grid computing and rules engines, and try to basically take these emergent concepts and bring them into a relatively legacy technical environment. So it started kind of from a front-end point of view as just simple stuff. You could scale web out, right? Just load balancers and web servers. And then what we did is we created a database environment that allowed us to begin to partition our customers. So customer A would be on, kind of one database server, customer B on another database server, but a common application layer, on top of it to serve up the experience. And then what we found was, again, this is on the cusp of 32, 64-bit systems. These systems were even hard, even at scale, to manage, and the load would periodically cause timeouts and database locks and those types of things. So we decided to separate our environment into separate tiers. So we started creating what we called a front end and a back end kind of database. So two very different logical and physical instances, very similar to one another, and allowing the front end to focus on customer experience. So highly scalable, performant, environment, and let the back end do some of the transaction processing. So again, let's not take the nightly, batch overhead and compete with the front end experience so that we could separate that resource pool. And what we did is we basically brought all these transactions. So let's use a simple use case. Customer makes a $100 payment online. Very simple. We'd accept it. We'd basically do an initial auth, and then we'd basically move that transaction over to our back end. And we did some really interesting things with state management I'll talk about in a second, so that we could basically replay a transaction at any point in its life cycle in the event the system crashed. So we pick up right where that transaction left off. But at the time, we had a lot of logic in our database, and the challenge was, how do we get that logic out of the database? So we created this concept, again, for SQL Server folks here, these were SQL jobs. We would identify a new payment came in. Let's batch it with all the other payments that came in. Let's go ahead and drop it into a queue of sorts. That queue then would run through a rules engine. And that rules engine would help us understand a variety of things about that payment. Who is it for? What are the accounting rules, associated to that payment? Behind the scenes, again, there was an accounting, ledger that managed a lot of the intrinsic details. And we would create all this information, and this was a heavily XML-based system. And what we were trying to do is we were trying to package up this job so that it could be sent autonomously to an agent model for computational processing. So this rules engine would help us build this really, about a 2 meg file, XML size, but it had its entire payload, it had its rules engine, and it had all the transactional criteria necessary. And then it would sit in a queue. We built these worker agents, what we called worker agents, and these were initially agents that we were running on the desktops of all our employees. So kind of a SETI example in the sense where we knew at night all these computers were sitting idle. So what if they were participating into our little network grid, checking out jobs, crunching activity based on the rules in the payload, and then checking back in the results. So it started with about 15 desktops, crunching this, and then we realized we needed to scale, much beyond that, because again, we had these tight tolerances. So we ended up standing up about 250 Windows XP boxes. Right at the time, virtualization was kind of emerging, so it got a little bit easier to stand up all these nodes. And it got to be quite performant, because we had these guys now essentially taking a payload from the queue. They were kind of pulling activity, saying, hey, I'm a worker agent, I've got idle resources, do you have anything for me to work on? I'd check out a payload, I'd crunch this activity. In the event I never completed my payload, the system was smart enough to basically reassign it to another worker agent. So again, when you're doing high volume, you start getting into complex scenarios, failures, bugs, race conditions, and locking. So you had to make the system, kind of fault tolerant to handle and insulate and self-heal, and that's what we did with these worker agents. And then the worker agents were ultimately responsible for third-party connections. So that's where we would govern these things to make calls to our payment processors, our ACH providers, out to Salesforce or other ERP systems. So in the end, it got to be really nice where our front-end experience was relatively elegant. Customers, had a performant web interface. Our back-end system did what databases are good at, which is reading, writing, and storing data. And we had this, kind of process that would allow us to take these workloads and distribute them across just a series of, agents. And then at the end, they would check in their results again to another queue, eventually to a service bus, and then back out, so that the person that made that $100 payment would now see the outcome of that payment. The two-sided accounting entries, the relieving of the invoice, and the increase of cash. So, if you zoom out, a lot of these principles are still employed in modern systems today. Again, this was before RabbitMQ. It was before, message buses and contracts. Obviously, we've replaced XML for JSON in some examples, but there were benefits from a system like this, because in the financial world, you have to have a lot of integrity. We couldn't use NoSQL, eventually consistent models. We had to have integrity so that at any point in time, somebody logged in, they actually saw the right balance. In addition to that, we had SLAs for a variety of customers that we had to support. So it turned out to be an interesting kind of technology experience. And obviously with that came additional opportunities and challenges. And as I mentioned, some of these concepts are still around, but solved through different mediums, today. I touched a little bit about, the parallel processing nature. You had multiple worker agents checking in jobs, and what if two people got the same job? Then it was a race to kind of like blockchain, in a sense. You've got this arms race to figure out who completed the task first, check in their results, and then independently validate the results before the other one, got in. So again, this is 2005, 2006 thinking, but some really interesting characteristics, from the implementation. And of course, all the transactional integrity, queues, and state management. And state management is particularly interesting, again, when you're building big distributed systems, because at any point in time, kind of like the Netflix chaos monkey scenario, something could go wrong. And when you're dealing with payments, it needs to recover, right? You can't have outages, you can't have gaps, you can't have discrepancies or rounding issues. So some really interesting things with state management. In accounting systems, you've got kind of post-edit codes and various transaction identifiers, and we just brought that concept into our entire application. So when a payment came in, it was at one state. When it was processed, it was at another state. When it went to having the accounting rules applied, it was at a third state. And again, just this kind of baton passed through the system that was helpful not only just for state management, but for new developers coming into the environment. You had this huge distributed system to try to wrap your head around, and allowed them to kind of focus in on various modulars, really only having to understand who's sending me something, and is it through, a schema validated way, and then who am I sending it to? So again, not quite microservices then, but the concepts moving away from kind of N-tier to SOA, service-oriented architectures, and then eventually to truly loosely connected systems that could operate somewhat independently and individually be scaled. I talked a little bit about the grid computing, talked a little bit about transactions per second, very interesting, at the time, the card brands, even PayPal, they were doing hundreds of transactions per second, with all due respect. This is early 2000s, very different than today. And we, through our 250 worker agents, would sometimes send 150, 200 transactions a second, and we would crash Vantiv. We would crash, Fifth Third, and at least, the instances they had some of their clients on. So we had to, build governors and various capabilities to restrict that. So again, some really interesting technical challenges. I talked a little bit about the state management, and again, this is relational database management systems. We didn't have the luxury of these elegant distributed, database platforms with eventual consistency. So we had to do partitioning and, load sharding, and again, try to build systems that weren't really designed for horizontal scale to insulate themselves and operate in that environment, even though that they weren't necessarily designed for that capability. So to leave you with kind of an example to breathe life into that, we would take a file, and let's say this was a teacher in Michigan, and we would process a payroll deduction. That payroll deduction had to be shared between the local, state, and federal level. So that $100,000 payment, some portion would go local, some to the state. And what we were doing was split settlement. Again, not realizing there was a term for that at the time, but through virtual accounts, we were able to abstract some of that complexity and give the financial or logical representation on a balance sheet to those respective dollars. And we parked all this on a single DDA at Fifth Third, who became very nervous about our business model in 07, 08, 09, not because of the financial mortgage crisis affecting us, but because what we were doing was a little risky. We had hundreds of millions of dollars in a single DDA, and our own logic representing whose dollars were properly allocated. And then, of course, payment facilitation came to rise, MTL, MSB, so all the other regulations kind of caught up with us, and we had to kind of clean up that model. And today, you guys would probably know it through an FBO model, where you could process payments through for benefit of account that allows you to abstract over the ultimate settlement account, if you will, with respect to payment settlement. So that $1,000 payment having to be split across multiple environments also had complex tax treatment. So in the political environment, if you raised $100 in a certain geography, you had to use that $100 within 14 days or you'd lose tax eligibility. That payment had to be used in that local community. So think about that for a second. I just got a $1,000 payment. I have to spend 100 of it in the same geography that I received it, and I had to have integrity to tie the two together. If I spent that money in a different geo within 15 days, I had different tax consequences. And then, of course, if there was a payment that ever got voided or canceled or a chargeback or dispute, you had to roll back the entire chain of events. So again, really interesting kind of behind the curtain work that we did there. And of course, we were very proud of the technology, which brings us to, it's almost never about the technology. I was a very proud, technologist building what I thought were pretty exciting systems at the time. And my business partner, was often to remind me, as I'm trying to solve everything through a technical lens, to get my head out of a server's ass was his favorite line. We're not building Picassos here, we're trying to deliver value for our stakeholders. And in the end, he was right, as much as I hated to tell him that. And when we finally did get to a point that we were ready to sell the business, the technology didn't come up nearly as much as I thought it was going to. I was very proud. I thought we were going to build some really novel technology that in the hands of a bigger company would dominate the industry. And of course, in the process, we got to meet our friends at BluePay, who I think Joel was the CTO of, is speaking here, I think later today, if I'm not mistaken. So I encourage you to check out his session. And in that process, they were a high growth company on the cusp of going public, and they needed to acquire EBITDA. So our company was very profitable, and instead of the whiz-bang payment integration work that we did, they needed to tell the market a narrative around integrated payments, and they needed profitability, and we checked those boxes. Joel and the technology team came to appreciate, as technologists, what we had built, but again, that didn't contribute. It didn't drive a higher multiple. It didn't really raise eyebrows from the smart suits in the room. So I share that with you only because what we're building, we're passionate about. We care a lot about it. We build architectural, academic masterpieces. And there's a time and a place for that. If you're contributing, to an open source community, or you're developing things that are, very strict from a CMMI level, they need to be perfect. For the rest of us, they need to be good enough. They need to be good enough to deliver value. They need to be good enough to iterate. They need to be good enough to get to the next stage or inflection point for your company. So I encourage you to, at times, take off your technology hat and put your business hat on. And, even though the sales guy's selling out ahead of your team's ability to deliver, I think if everybody can appreciate their respective roles and look at it through the organizational's mission, we're here to grow, we're here to help our clients, we're here to help the end users, and everybody, rowing in the same direction to help one another is a very powerful environment. And I'm very happy to say that's what we now have with the company at Autobooks. So you can see a number of transactions. I won't go into the weeds. Interesting experience, probably not that common, but needless to say, the company really, again, wasn't strategic to BluePay. First Data loved it because of the payment volume. We were doing a few billion, a year in transactions. And then, of course, Fiserv, buys it. But again, these are, with all due respect, relatively legacy payment organizations. They understand ISO, merchant acquiring. They don't really understand payment facilitation. And it turns out the markets saw more value, and they actually spun the business out from Fiserv. And they're often running, very narrowly focused at that association management space. And we continue to obviously cheer them on from the sidelines. So in a takeaway, some of the things I benefited from, I strongly encourage HBS's 5 business stages of growth. What's interesting is you get a relatively academic view of the various inflection stages your company goes through. And I was lucky enough to go through all of them, meaning founding single developer to a leadership capacity to an executive capacity with outside board directors to one that I actually removed myself from the board and completely transferred operations. So you go from working in the business to working on the business to then advising the business, and each present interesting challenges along the way, and some don't ever get to experience that full path. And then, of course, Rockefeller Habits I appreciated because of it helping me understand how to build a durable business model. And so again, if those are helpful, I encourage you to check them out. So, quick time check. First part was a little technical, a little bit about some of the challenges and some of the architectural scaffoldings we had built. Hopefully for the technology people that resonates and you can take something from it. Again, the concepts are, at the time it was first principles. We couldn't go reverse engineer something. It didn't exist. We had to figure it out. It wasn't perfect. The developers that work in that company today continue to remind me how terrible the decisions were that we made, in those days. But you do the best you can with the resources you have and the information, you can gather. And yeah, I wrote, data readers with DR as the acronym, and naming conventions are terrible, but all of that in hindsight, right? And we kind of laugh at it now, but the truth is that code is still running, 15 years old, and it's operating at scale. And we can look around our industry and probably find examples of that in a variety of cases. So it's, again, in many cases, we're asking systems to do things that they weren't originally designed for. That's not a fault of the system, it's a fault of society evolving, and that's a good thing, pushing innovation, and hence we're able to, as a development community, respond with modern implementations to help solve real world problems. So I want to contrast that technical experience with the experience I'm now having running a fintech. So I'll pause for a second. Any questions or initial thoughts on kind of the technical side, anything that stuck out at you, or maybe to ask the question differently, is there one thing you would have liked me to cover more from a technical point of view that I didn't? Yes?
Which concept is the technical debt that we had other naming? Do you have any right this over years? Because that's a lot of businesses in that phase.
So make sure I understand the question and to repeat it. How much of it was technical debt, or how much did?
I mean, how much of it still exists in the original form?
I'm embarrassed to say a lot of it still exists in a very similar form. Of course, with the leadership team moving on, so the question was how much of that system still exists in production today, 15 years later? I would say 80% of it. The presentation layers have likely all been replaced, but that back-end infrastructure, the rules engine, the distributed computing, that is all alive and well. And you can imagine new technologists come in. Needless to say, we all like to think it's easier to throw it away and start fresh with a greenfield, but then you start to peel back the layers and you're like, holy cow, there's a lot here. And the business isn't gonna stop, right, delivering value to its customers, and it'll give me the time and the resource to port all this to some modern architectural marvel. So you end up cobbling together and layering on. So yeah, it's still very alive and well, and too many technology people's dismay, but it's still delivering shareholder value. Sorry, was there one more question in the back? Yeah, Wade.
So going through that from writing the first line of code to kind of
Yeah. Yeah, it's a good segue, and that is exactly my intent. So I think what it has done for me is give me a deep appreciation, right? Because I was the guy, like many of you, writing the code that nobody understood. In many senses, nobody valued, right? I had all these wonderful ideas, but yet nobody gave me the opportunity to explore them or devote time to them. I wanted to go to these conferences to learn more and bring back all these ideas, but even at a small company that I was a co-founder, I had constraints and I had conflicting priorities. So it gave me an opportunity to be much more humble, show much more humility, and have a deeper appreciation for others now in our respective orgs, giving them an opportunity to put their fingerprints on important things, allow them to fail and make mistakes, and probably more specifically also give me an opportunity to call bullshit, which is extremely powerful for technical people. Because with all due respect to our business friends, they don't understand a lot of what we do, and when a really strongly opinionated technical person gets in front of you and starts to talk past you, you have a hard time of telling them they're wrong, or maybe that could be done a different way. But with our backgrounds, it's not that we understand every nuance, but you can fall back to a debugging mindset. Well, hold on, let me just walk that back. Let me understand how you got here, and very logically, I don't need to know that particular language per se, but help me understand why you're making those assumptions and where you see objective validation that you're on the right path. So, again, in a very small way, as technical people, I think it sets us up in many respects to be great technical leaders. And I think we are seeing that in industry, right? I mean, look at the CEOs of some of the most impressive organizations, from Microsoft to Google, and beyond. These are all folks that have very strong technology and engineering backgrounds. Again, that logic, that understanding. The challenge for us is understanding the business and not being that anti-establishment technical mind that doesn't want to help a business person, even though they think differently than us, even though they have different ways of communicating. The challenge is for us to step into their shoes. So in terms of the lead up to Autobooks, the industry was at an inflection point. In 2015, 2016, we were doing some research, and some of you probably know this. I've got a slide I'll jump ahead to. You might remember the CB Insights unbundling of Wells Fargo, right? Early on, it was all about fintechs versus banks. And we were seeing companies like Acorns and Robinhood challenge wealth management inside of the financial services industry. You had alternate lending and payday loans, making it easier for people to get access to capital that didn't require 30 or 45 days just to find out no. And then, of course, the rise of payment companies. There's clearly too many to list, but all of this comes at the expense of what the bank had historically been able to deliver through locality, being at the corner of 5th and Main. If you needed a car loan, if you needed help with your college savings or a mortgage, that was obviously the place you would go to. And now with technology and the consumerization therein, we have alternatives. And the challenge in our eyes was we're at an inflection point. And I think this conference is representative of that. The narrative has changed from fintechs versus banks to one of a little bit more of a collaborative environment, thankfully. But the question still remains, what does the financial services community look like, and what do they need to do to remain, and in some cases become relevant for that next generation of digital customers? Because the competition has never been fiercer, the access to capital has never been easier. So we recognize some of this to our early awareness, but the challenge we realized was this wasn't well understood, meaning what we learned in Treasury, Lockbox, ACH, our payment acquiring experience wasn't readily available to small and micro businesses. The data kept pointing us here, but everybody we talked to would say, well, QuickBooks does that, or Square, PayPal does that, and why you can't compete with them? Why would you try? And it was daunting, and so we had to peel back some layers to get again back to that first principles mindset. And one example I often cite with respect to QuickBooks, because we did launch with a bit of an accounting undertone. QuickBooks has about 80% of the market for people that use accounting software. What they don't tell you is most small businesses don't use accounting software. And it turns out, if you look at the actual data, take a bank, core analysis, about 90% of their customers are not using an accounting or financial management system. They're still heavily dependent on paper checks, cash, spreadsheets, and file cabinets. And this is 2021. Again, these are not the, 2-year-old venture-backed titans of industry. These are lifestyle businesses in all of our communities. Our friends and family, aunts and uncles running lifestyle businesses, still not sure how to program the VCR, trying to figure out APIs or Stripe. Not going to happen, right? The next generation will, but a lot of these folks are still trying to figure out how to run an HVAC business or how to run a modern lawn care service, and they don't know where to go. So it looks like we got about 5 minutes left. I'm going to go through these next couple sections here to, hopefully frame up the opportunity and capture some of our learnings. But, what we recognized was banks were in a unique position to help their customers. But what we all, recognized again was that many of them didn't build their own technology. They were heavily dependent on core providers, which then opened our eyes to, well, heck, maybe we can work with core providers. And learning, how to navigate that was challenging, and it took time. And like anything, though, once you understand it, you can apply it. And then we were able to replicate, that success with others, because they had an obligation to help banks, right? Banks were listening to their customers were frustrated. Banks became frustrated. Who do they call? They call their core provider. And what does the core provider do? They acquire companies that deliver interesting experiences, much like Banno with Jack Henry. Again, ahead of its time, now very much the flagship digital platform for Jack Henry. So with all due respect, a lot of these companies don't build a lot of technology, but they got great distribution. And for all of you, understanding how to navigate this environment, the role the core providers play, this isn't about hating on them. There's a lot of stuff that they do that are mission critical to banks that are dependent on their success, where our energy is better served by trying to help, at least from my vantage. We come from how do we help the banks versus hurt the banks? In other words, we aren't trying to disrupt banking, we're trying to enable. And there's different, obviously, fintech strategies here, but what we found in our early days was venture capital was more interested in hurting banks than helping banks. And that took a little bit of time for us to kind of catch up and grow up that, you can be successful distributing through core providers and delivering value to the bank. And along the way, we were creating a new category, which was challenging because even though systems like bill pay and remote deposit capture existed, a lot of energy in banking and treasury was focused on payables, moving money out of the bank, and not enough attention in our eyes was spent on receivables, helping banks actually get paid or bring money in, and indirectly helping their small businesses get paid faster, reducing their days sales outstanding. Businesses need cash flow. Cash flow is oxygen to a small business. And the only way you're going to help a small business initially is by helping them speed up their cash flow. If you can speed up their cash flow, they live to do other valuable things, grow their business, employ people, make contributions to their communities, and indirectly benefit the bank, right? Increasing deposits, increasing non-interest fee income, ultimately having a better understanding of their business's cash flow so they can actually make higher quality lending decisions, right? They're not looking in the rear with what has happened from a seasonality, but they can look forward with predictability, and that's very powerful. So we stumbled, and we found a couple of our first banks were Jack Henry banks. And it turns out Jack Henry actually had a model for partners, a VIP program that we were able to get connected to and help us navigate. But then we had to find other Jack Henry banks, which was challenging, right? Nobody gives you a list saying, hey, these are FIS banks versus Jack Henry banks. So we had to get creative. As technologists, what do? We write scripts. We start downloading the FDIC lists and hitting domains, and we start reverse engineering the tells that are in the web code that told us these banks are Banno banks or Net Teller banks or Q2 or Malazi. And then that allowed us to hunt smarter, talking to banks that we knew we could sell and implement because we were building a distribution partnership with Jack Henry. So interesting things, finding customers I kind of touched on, trying to get folks that you can sell to, because the truth is banks will likely say yes to what you're selling, but you will not be able to build the integrations fast enough. There's just too much diversity, too much complexity behind the scenes. So start a little smaller, build something of value, and then iterate and expand is the general sentiment here. And along the way, you're going to have to learn a lot about compliance and vendor risk management, security. And all I can really say on that is hire the best accountants, lawyers you can. They've seen the movie before. They see more deal flow than you, and they can help you navigate some of this in ways that the others in the industry don't fully understand. And a lot of it is anticipating the bank's concerns or questions. Make it easy for them. They've got risk working with you. So how do you make it easier for them? Build a vendor risk management process that's built from the OCC's point of view or an examiner's point of view. Make their job easier, and they'll come to embrace you. So again, a lot of it is just a little sleight of hand, making it easier for them, understanding the reputational risk, and really understanding the risk of getting it wrong far outweighs the benefit of getting it right if you're a bank. Think about that. So the last piece I'll leave you with is understanding your customer. So we figured out distribution, we figured out partnerships, and certainly understood the tech, but we didn't understand what our customers actually wanted. And that aha moment came with jobs to be done. So strongly encourage you, if you guys are really interested in understanding why a customer would choose your product over something else, check out Competing Against Luck. It really breaks down for technical people from the art to the science, sales and marketing not being so soft and squishy to being tangible and pragmatic. And you're going to build a lot of interesting materials that help you begin to understand how to apply your technology through distribution, understanding your customers, and ultimately, how to have success in the market. So I hope this was useful. I appreciate your time. Happy to talk about any of my experiences. And if there's any feedback you can give to me, I'll just jump to the end here. I'll leave you with it's rarely about the tech. It's often about distribution. Low customer acquisition, be ruthlessly efficient. And it's always about the team. So hire the best people you can afford, work with and pay your accountants and your lawyers. They're worth every penny. And with that, I appreciate your time and welcome any feedback. Thank you very much. I think we can do a question or two if anybody's interested. I don't believe there's another session right behind us, so if again I can help, or if anybody's interested in the deck with any additional materials, happy to point you in the right direction. Yes, sir.
Yeah, just back on the tech, I was wondering, how much thought were you giving to modularity at the time? So having some of those pieces be straight input outputs that you can swap out, and what extent does that account for the fact that, sounds bad to say it this way, that 80% is still illustrated?
I'll be honest, like a lot of us, you don't sometimes know what you don't know, and honestly, we were solving first problems. Just make a button click event, put a record into the database, and happy path to the demo, to the sale of your first customer. So with all due respect, a lot of thought was not considered until a stress crack or some type of scale problem presented itself. And then you make the case, and it was a multi-million-dollar commitment. We literally put sales on hold for 9 months, and I convinced the team that was what was going to allow us to eventually scale out of it. But we had hit a breaking point. Our system was locking. Customers' caching at the time was poor. A customer would log in on the same machine and see somebody else's information, right? In banking or payments, that's a big problem. But it hit that wall, unfortunately, before I could step back and say, I couldn't say I told you so, right? As technologists, you kind of saw it coming, but it wasn't until the business environment gave you an opportunity to then, again, through a mature business case, rationale, acquire the resources, funding, in the time necessary to actually then apply some of that. And then you overcompensate, right? Because now you got money and you got time, like, all right, let's go build the best tech that we can. And you start that way, and then the deadline starts to loom, and you got to start making concessions, and then eventually you ship something incrementally better than where you started. So it's iterative. I've not met many people that had the luxury of building massively scalable systems right from the get-go. Maybe Quibi or some of these other high flyers, but we see how some of those stories sometimes end. Any other questions? Yes, sir.
You said it's about getting the right team. How difficult was it to get the right team?
The right answer is it's extremely difficult and extremely hard. What I would say benefited us was environments like this, a handful of industry conferences. Money 2020 is great and ET is great, but you need to separate the signal from the noise. With all due respect, those the learnings aren't sitting in the sessions, right? They're in the networking. And this environment is probably of the densest you'll find with respect to finding high quality technical folks. But the others is the network. Like, with all due respect, there's some fintech accelerators now. I don't want to say they're all perfect and that you may need them, but they can help you expand your network. But my secret sauce, and it's probably going to backfire at me because we're hiring like crazy. Find great people at successful companies that have seen the movie before. So for me, I'm hiring from companies that are bigger than mine, that have had some success, maybe recently gone public, and likely those people are somewhat uninspired at what their future holds because all the excitement was in the earlier days of building. Go cherry pick those people because they're likely not very happy. They had some golden handcuff, they'll get their earn out, and then they want to go do meaningful work again. So again, it takes a little creativity, but truthfully, if you know where to look, the people are, they're accessible. And yeah, thank you, yes?
Any lessons learned from navigating, like through the Jack Henry?
Yeah, so the question was lessons learned through Jack Henry, and full disclosure, we work now with CSI and Q2 and Fiserv and FIS, and there's a lot of similarities, but there's also differences, and I think, gosh, where to start? Be patient, right? They've got a lot of conflicting priorities. They've got their own challenges. Imagine hundreds of bankers calling for things that they perceive to be important that you have to navigate, right? The commitment to the street, to your current customer base, and then what is ever left is where you're actually driving innovation, and generally that's very small. So it's very challenging. There's a gentleman at the back of the room that could probably answer this from an insider point of view. If you wanted to comment, I'd encourage you.
Yeah, I would just say, and I'm a retired CTO from Jack Henry, so I think the biggest challenge is exactly what you said, Steve, is those competing priorities. I think that the secret sauce I try to always tell fintechs out there is, just like you did, maybe you stumbled onto it, find a couple of Jack Henry banks. I know it's hard to get that list, but call me.
It's out there.
But if you find those that get some early success, it's a lot easier to get into Jack Henry that way. I mean, I know we make it hard, I know.
But it's by design. I would argue it's the same challenge that the venture community has. Meaning, you send them a deck, Andreessen's not going to return your call, but somebody that's a portfolio company that thinks highly of you makes an introduction, guess what? You're having a conversation. So to, the point, finding advocates, bankers, they can put, with all due respect, a little bit of pressure on the partner. They get calls from us 100 times a week, right? But if you can create some momentum with some of their influential customers, secret sauce, figure out who's on their steering committees, who's on their advisory committees, figure out who's the most influential folks at these organizations and get them to begin to lobby for you. And then what happens, the logjam will free. And then all of a sudden they, hey, you're delivering value for this customer. My guess is you can probably help this customer and this customer too. And then the domino starts to fall. But it's outside pressure, social proof, right? It's not press release noise. It's your customers that are influential talking to their peers about how great you were to work with. You didn't sell them a bunch of vaporware. You actually delivered on time, and your customers love it, or their customers love it. That, I can't tell you, is not the norm. Typically, it takes longer. It's more expensive. It fails, and it's not generally, the uptake isn't very good. So if you can just do basic things, you'll immediately differentiate yourself from some of the other partners that they're evaluating and hopefully find yourself in their good graces to become one of their, because they all want the story. They want you guys to be successful because it shows to the market and to their customers, they are investing in innovation. They're partnering with the next gen leaders of the industry. So it really does help everybody, but it is a little challenging to navigate. Maybe one more? Yes, sir?
Yeah, I was I'm actually saying that all the Jack for those fintechs and core providers, there's a company called that is out of Texas.
Yes.
They have a list, and you have to pay for it, but they've got a list of all the providers.
Yep, so it can be acquired. Again, the network can probably get you started. My bet is somebody in your local community is a bank. These guys are big, right? They got banks and credit unions everywhere. You find a couple and get a little bit of a stride. But yeah, the data can be acquired. We can debate its accuracy and relevancy, but it's hard to acquire. Go to the conferences. When we started, again, this is a developer conference, so let's talk about hacking. You go to a developer conference, with all due respect to our, I won't pick on Jack Henry. We went to another core conference. Guess what banks are generally attending the core banking conference? Their clients. So buy one ticket, get in however by hook or crook you can, and hack the app. And you quickly begin able to completely reverse engineer, who they are, their title, what bank they're in, what assets, what core, and it's gold. So a little bit of tech creativity, you can figure out the environment. Nobody's gonna hand it to you, and they shouldn't, because you don't deserve it. You gotta work hard for this stuff, guys. All right, I think that's it. We're good on time. Thanks very much. And again, I'm around if I can be helpful in any way. Please don't hesitate to reach out. Thank you very much. Hey.
Greg Schultz.
Greg Schultz. Oh, Kasasa.
Eddie Schultz is
Yes, fantastic. Your reputation precedes you. Let me turn off my mic here.